Target has been by far the most requested stock on this channel, so I decided to do a very quick update on the company as the stock is down over 21.5% after reporting earnings. It's been absolutely crazy. Earnings have been a disaster. So I'm going to do a very quick update, let you know if I believe the stock is a buying opportunity at this price, or maybe it's still overvalued and we should wait for a lower price. I'm going to give you all the details and everything here in the video. Now, Target stock has also been a disaster. It's still sitting at the same price it was trading at in 2020, and it hasn't been good for the company. It's been terrible. And earnings have been terrible as well. Massive miss on earnings per share. $1.85 versus $2.30. Just terrible. They also missed on revenues. Very slight miss on revenues. But the worst part about the whole thing is that they actually had to reverse course and cut guidance. They raised guidance just 3 months ago, and now they're cutting guidance. So I'm not sure what the management of Target are thinking. I mean, how are they even thinking about that stuff? Normally, management is a bit conservative in case something goes wrong. But once you go from raising earnings targets to cutting earnings target in 3 months, I mean, I don't believe this is the best, management team ever. And they cut it to 830 to 890 from 9 to 970. So this is not a small cut. This is a huge cut. It only happened in 3 months. It's been absolutely insane. And the fourth quarter is also expected to be flat in terms of a comparable sales, or you could say same-store sales growth, which is the most important metric whenever you're valuing retailer. But the worst part of it all is the company is cutting targets in terms of same-store sales. They're cutting earnings per share for the year. And this is with them already cutting prices of over 5,000 items. 5,000 items they cut prices on, like diapers, bread, and milk. This is not like technology stuff they're cutting prices. On essential stuff, they cut 5,000 items. And in October, they reduced another 2,000 items in terms of prices. In total, after Target lowering prices on over 10,000 items, they still couldn't get the company going. They still had to revise earnings per share lower. They still had to revise same-store sales being pretty much flat. I mean, this would really show you what's happening at Target and what's happening at the demand for the company. This is the worst part about investing in Target. This is the difference between Target and Costco and Walmart, is that Costco and Walmart and such retailers, even BJ's Wholesale Club, a company I talked about, they are more into essentials. Most of their revenues or net income comes from essential stuff, like stuff that people need, groceries and many others. But for Target, most of their revenues come from stuff that you don't really need. You could say consumer discretionary stuff, stuff that's extremely, extremely cyclical. For example, out of $25 billion in sales, and this was the last quarter, as I don't have the new 10Qs, I haven't posted it yet, but as of the last quarter, I believe in total it's around $14 billion. So around $14 billion of $25 billion came from essential stuff like beauty, food and beverages, and household essentials. But then you have the rest like apparels. $4.2 billion in apparels. It's insane. And accessories, hardlines, which is technology stuff and gadgets, $3.2 billion. Home furnishing and decor is $3.9 billion. So a lot of the revenue in Target is extremely, extremely cyclical. It goes up and down, and the consumer hasn't been too strong. And this is one reason why Target has been suffering so much relative to Walmart and relative to other retailers in the space. And you could really see it from what happened to the earnings per share estimate of the company. It pretty much skyrocketed from 2020 to 2022. Because we had a lot of pumped up demand due to the stimulus, being people buying stuff they don't need, and then they buy from Target. But once the stimulus effect was gone, EPS went down to 602, then it got to 894, expected to go to 931, and then it goes up from here. But it's still pretty much making the same kind of earnings per share it made in 2021. So this would really show you how cyclical the business model of Target actually is. But in terms of valuing targets, even though the company has been missing on those estimates, they haven't been beating estimates, they've been missing on estimates. So I'm going to give you the best case scenario. And this is the best case scenario on Target, which is that Target actually gets to $13.34 by 2029, which is 5 years from now. And if Target trades at the same multiple of 15 times, even though the stock is down 20%, but because they had to revise earnings per share estimate for the year, they revised it like 20%. Earnings per share is still the same in terms of PE ratio. So around 15 times earnings, this is where the company is trading at. Now doing a very basic calc, which is the same as the mean, which is 16 times trading at 15. So using a very basic calculation, calculations, we get 13.34 cents. And then we time it by the mean multiple of 15 times earnings, which is the current multiple. In total, that would be around $200 per share. The current share price is $122. We divide it by 122. We get around 64% on the upside over the next 5 years. And I don't know about you, but this is not enough. This is like S&P 500 kind of returns. I would never invest in Target to get 64% on the upside. What I try to look for, doubles every 5 years or 15% CAGR for the next 5 years. If my target is 200, in order to get a double, you would have to buy Target stock around $100 per share. And $100 per share was pretty much around the bottom of September of 2023. And this is as low as it was in March 2020. So I'm not sure if Target is going to $100 per share, but $122 is not extremely appealing to me. This is not something that I'm just dying to buy the dip on. There are so many better opportunities in this market. Pepsi is a better one, in my opinion. Railroad companies, I'm going to talk about them. They've been crashing. So there's many different opportunities, and 121 isn't something that's just so interesting that I just can't wait to buy Target. If it was $100, $105, maybe. But at 121, I don't believe it's worth the risk reward to invest in Target at this price. And this is just my honest opinion on the stock. It's not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.